Well, a gauge of confidence among home builders released today shows sentiment remains at the highest levels seen in more than 6 years. The U.S. National Association of Home Builders Wells Fargo Housing Market Index for January stood at 47, the same as December. While the builder confidence level is still below the key number of 50, anything over that shows more builders see sales conditions as good rather than poor. The most recent reading is still almost 90% higher than at the same time last year. Together with blowout earnings from U.S. home builder Lennar, is an undisputed housing recovery underway, or is it too soon to jump to happy days conclusions? For more, we are joined by Robert Shiller, economics professor at Yale University and one of the architects of the Case-Shiller Home Price Index. He is in New Haven, Connecticut. Good to have you back with us, Bob. Thanks for joining us.
Hi, Howard.
Hi. So, you know, when we spoke in September, I asked you basically the same question about the housing market in the U.S., and I think you said, I'm not in the mood to predict a big move up. It just doesn't seem to me that's the right forecast. It might be the bottom. I sure can't tell for sure. Can you tell now that an undisputed recovery is underway?
Well, as a professional economist, I shouldn't be predicting big moves up very often, right? Usually it's business as normal. And, you know, in terms of the NAHB number that you referred to, that's up to normal average levels. It shot up a lot in the last 6 months. You know, 6 months ago, it was way down. So there's been a substantial change in that index. Now, if you look at permits, which are permits to build a new single-family house, they're not up as much. So there's a little bit of contradiction there. But I'm willing to say that it's likely that we're coming into a more normal housing market.
Likely that we're coming into a more normal housing market. So, you know, characterize what normal is, because most of us have probably forgotten what normal is.
Well, you know, I've got data on housing back to 1890, and the thing that I've learned is that over most of that century, home prices just keep up with inflation. So that's normal, you know, and the inflation now is running at about 2% a year. So, yeah, 2% a year price increase. No change in real value. That's a normal housing market, and maybe we're back to that. I still don't rule out price declines yet, but I'm seeing the evidence that's coming out, and it's looking like maybe we're back to normal.
So you say you still don't rule out price declines yet. What would cause prices to decline from where they are now?
Well, you have to realize that we don't know what caused the price declines that we already saw the last time around. There isn't an exact science here. Home prices peaked in 2006, and they started falling. And if you look in the U.S., if you look at the path downward, it was a steady path downward until around 2009. So it's not like we understand the last time. But I think that factors that you can easily think of are what's going on in the U.S. Congress, our inability to deal with the debt ceiling and possible expenditures that could throw us back into a recession, or possibly, you know, European events working out badly. These are concrete things that one might mention that are risks going forward.
So what kind of odds would you put on the U.S. messing up on the debt ceiling or doing something very drastic on spending cuts, for instance, that might push the United States into recession and therefore affect housing prices?
Well, I don't know how to quote probabilities exactly, but I'm thinking it's substantial. It's not just that the Congress messes up, that they play games that get people upset, and then they start pulling back their spending. We already saw that in the Christmas holiday shopping season. It wasn't as exuberant as we thought around Thanksgiving. And I think that people are really affected by this. When it seems like the government can't get together and agree on anything, and there's hostility and anger being expressed, people instinctively pull back. And they say, I'll postpone buying this house. They're not doing that yet, not with the data that we've seen, but it could happen.
And so just back to what you described as a normal housing market, homes keeping pace with inflation. I just had a guest on who was talking about who mentioned the Miami condo market in the context of J.P. Morgan's earnings today and the bump they had on their mortgage side. And he said, you know, the high-end condo market in Florida is now outpacing Toronto, which, you know, has had a pretty robust condo market. I mean, is that true? I mean, because, you know, that's not keeping pace with inflation. That's a big bump.
Well, yeah, with our S&P Case-Shiller home price indexes that I helped produce, we've seen in the last month home prices outpacing inflation by a wide margin. But part of that is just seasonal. The most recent data are still in the end of the summer season, and data have been strong at that time. So I don't know to make too much of that. Now, it could be that you'll always find some strong markets, and maybe the Miami market is strong right now, but I just don't want to over-extrapolate from that.
What markets are really still lousy?
I don't know if we have any really lousy markets right now. You know, people would say Detroit because it's gone through such a huge decline in home prices. But we've seen some up bumps there, too. And, you know, I'm ready for Detroit to make a recovery. I grew up in Detroit, so I have some sense of that city has potential. When a city gets really beaten down, I think they tend to come back.
Okay, what about Canada? A couple minutes for us here. The last time we spoke, as I said, in September, we also talked about Canada. You were really nervous about Vancouver.
Right.
Specifically, you said it was flashing major danger signals. We have seen a big decrease in sales there. What more could we see?
Well, yeah, it's interesting that in Canada, it seems to be really out of phase with the United States. You know, people are asking, is the United States recovering? And that's exactly the opposite in Canada. They've had a big boom, and then now sales are dropping, and prices, I understand, are leveling off. The thing that bothers me about that is that does look like the end cycle. It may be that they're just leveling off, and that's fine. But when you see sales dropping and prices increases slowing down, that could be a sign of a downturn in the future.
But most of our major bank CEOs were speaking at a conference last week, and one after another they said it's going to be a soft landing. Do you believe them? Do soft landings occur that easily?
Well, I look in history. We haven't had such big bubbles before. I don't have a long history for Canada, but I suspect it's like the United States. The price increases Canada has seen in the last 10 years look big by historical standards. So I don't know exactly what history tells us about soft landings. I don't know. I think we have fundamental uncertainty about the future, and really the lesson that investors should take is that we don't know. It's just like the stock market. We don't know. And there's no expert that can confidently tell you. So I think a soft landing is a possible, as far as I know, is a possibility for Canada. But it could also be a decline that's coming.
Briefly before we go, Bob, would you be a buyer in either Toronto or Vancouver right now, or a seller?
Well, one always has to diversify one's portfolio, and I have not done that, I have to say, but I think that people should try to. I think it is risky in those cities.
All right.
And someone who's thinking of buying a second house, you know, having one to live in is fine, I suppose. But a second one, maybe there's other investments. Think about, use your imagination. There's other things.
All right, Bob, we have to go. Great to have you back. Thanks a lot.
My pleasure.
That's Bob Shiller of Yale University and co-creator of the Case-Shiller Home Price Index. Up next.